Welcome back to our weekly market review. I'm Burke, Chief Investment Officer at VAP Wealth Advisors. This week delivered some significant surprises. Markets faced a critical turning point as job data shocked investors. Let's dive into what happened and what it means for your portfolio.
Three major indices tell different stories this week. The S&P 500 exchange-traded fund gained a modest 0.33%, closing at $647. Technology stocks performed better. The Nasdaq 100 jumped 0.99% to finish at $576. Small caps stole the show. Russell 2000 surged 1.11%, reaching $238. This performance signals something important about investor expectations. Friday's jobs report changed everything. August added just 22,000 jobs. Economists expected 75,000 to 77,000 new positions. This represents a dramatic miss. June numbers got revised downward too. The month now shows negative 13,000 jobs. That's the first negative reading since December 2020. Unemployment climbed to 4.3%. This marks the highest level since 2021. Markets immediately priced in a September rate cut. Probability now sits at 100%. Some traders see odds of a larger 50 basis point reduction. Initial optimism quickly faded Friday morning. Stocks opened higher on rate cut hopes. Treasury yields plummeted to April lows. Investors celebrated the prospect of cheaper money. But sentiment shifted during the day. A darker interpretation emerged. Maybe this weak data signals recession instead of soft landing. Fed cuts might become emergency medicine rather than fine-tuning. Fear replaced euphoria by closing bell. Three standout winners emerged this week. Broadcom led the charge with a stunning 12.61% gain. Record revenue of $16 billion drove the rally. AI semiconductor sales jumped 63% to $5.2 billion. Pool Corporation advanced 5.47% on falling mortgage rates. Lower treasury yields translate to housing market hope. Tesla gained 5.08% after proposing a $1 trillion compensation plan for Elon Musk. Each story reflects different market themes. Not everyone celebrated this week. Lululemon plummeted 18.58% after disappointing sales guidance. U.S. growth concerns weighed heavily. Kenvue dropped 9.35% on autism Tylenol study concerns. AMD tumbled 7.07% following a key analyst downgrade. Seaport Research cited slowing AI accelerator demand. Supply chain checks suggested struggling order growth. This chart reveals the market's true story. Investors aggressively rotated into long-duration growth sectors. Communication services led with 3.64% gains. Consumer discretionary followed at 1.42%. Meanwhile, cyclical sectors got crushed. Energy fell 3.13% on demand concerns. Financials dropped 1.59% as yield curves flattened. This rotation shows a market preparing for major economic shifts. We're witnessing a fascinating contradiction. Growth stocks rise on monetary policy hopes. Cyclical stocks fall on economic weakness fears. Investors bet on both outcomes simultaneously. Alphabet and Tesla drove communication services higher. Lower rates make future earnings more valuable. But energy companies suffered as oil prices dropped 3.09%. Banks face compressed interest margins ahead. This tension defines current market conditions. Let's trace this week's key events. Chinese PMI data started Sunday with mixed signals. U.S. markets stayed closed Monday for Labor Day. Tuesday brought weak manufacturing data. Wednesday's JOLTS report showed declining job openings. Thursday delivered more disappointment from ADP. Friday's jobs bomb completed the picture. Each data point built the case for Fed intervention. Geopolitics added another layer of complexity. The Shanghai Cooperation Organization held its 25th summit. China, Russia, Iran, and North Korea deepened their alliance. This gathering signals a more fragmented global order. U.S. multinational corporations face increasing risks. Supply chains grow more complicated by the day. Long-term implications extend far beyond this week. The Trump administration dropped a major bomb. New tariffs threaten semiconductor imports from companies avoiding U.S. production. This directly targets the fabless business model. Companies like NVIDIA and AMD design chips but outsource manufacturing. Taiwan Semiconductor handles most production. Tariff threats create immediate vulnerability for these firms. Policy uncertainty weighs heavily on sector performance. Two critical reports arrive next week. Producer Price Index comes Wednesday, September 10th. Consumer Price Index follows Thursday, September 11th. Consensus expects headline CPI at 2.9% annually. Core CPI should hold steady at 3.1%. These numbers will determine Fed policy magnitude. Markets hang on every inflation data point now. Two paths lie ahead for markets. The bull scenario needs cooler inflation data. This would validate the disinflationary narrative. Soft landing hopes would strengthen. A 50 basis point rate cut becomes more likely. Growth and technology stocks would soar. The bear scenario involves hotter inflation prints. Stagflation fears would emerge. Slowing growth plus persistent inflation limits Fed flexibility. Both stocks and bonds would likely sell off sharply. Three sectors deserve special attention next week. Technology remains highly rate sensitive. Any yield movement drives significant price action. Real estate will respond strongly to rate expectations. Financials provide the economic health barometer. Rebound signals easing recession fears. Continued weakness suggests deeper concerns. Apple and Microsoft performance often dictates broader market direction. Our value-aligned portfolio had several standout winners. Broadcom dominated with that 12.61% surge. Record AI revenue and $110 billion backlog impressed investors. Alphabet gained 10.38% on antitrust relief. Multiple analyst upgrades supported the stock. Taiwan Semiconductor rose 5.43% despite tariff concerns. AI sales tripled in 2024 and should double again in 2025. Strong fundamentals overcame policy uncertainty. Additional portfolio winners tell important stories. ASML gained 5.26% on a key UBS upgrade. Analysts see long-term quality compounding ahead. 20% EPS growth from 2026 to 2030 looks achievable. Tesla's 5.08% gain reflects governance improvements. The proposed compensation plan aligns Musk's interests. Ambitious targets include $8.5 trillion market cap. Annual vehicle delivery goals reach 20 million units. Not every holding delivered positive results. AMD led declines at negative 7.07%. That Seaport downgrade created significant pressure. Supply chain checks revealed concerning trends. Diamondback Energy fell 6.76% in the energy sector rout. Economic slowdown fears weighed on oil demand. Nvidia dropped 4.11% on tariff vulnerability. Fabless companies face the greatest policy risks. Additional weakness emerged in other holdings. NXP Semiconductors declined 3.45% on broader sector concerns. Technical factors exacerbated the decline. Recent insider selling added pressure. Cisco Systems fell 3.17% without specific catalysts. Positive earnings from competitors drew capital away. Mixed option sentiment reflected uncertainty. These moves highlight sector-wide challenges. Our semiconductor holdings perfectly illustrate market themes. Winners include companies with supply chain advantages. Broadcom benefits from custom AI accelerators and diversification. Taiwan Semi remains indispensable despite risks. ASML provides critical equipment to everyone. Losers face more direct threats. AMD struggles with slowing demand. Nvidia confronts tariff vulnerability. Geographic exposure determines performance differences. 4 major themes define this market moment. Fed pivot now appears certain after weak jobs data. Debate focuses on magnitude rather than timing. Market contradiction reveals investor uncertainty. Growth stocks rise on monetary hopes. Cyclical stocks fall on economic fears. Geopolitical risks introduce new variables. Semiconductor tariffs create winners and losers. Inflation data will determine our path forward. This week reminded us that markets rarely move in straight lines. Economic data creates opportunities and risks simultaneously. Our value-aligned portfolio positioning reflects these realities. We maintain focus on quality companies with sustainable advantages. Geopolitical uncertainty demands careful stock selection. Thank you for watching our weekly review. Don't forget to subscribe to next week's update. Until then, stay invested and stay informed.